First of all, on the choice of 600, obviously there was a debate within the Governing Council as to what would be the appropriate size. But we collectively determined, and there was broad consensus around that proposal, we collectively determined that the 600 billion should bring us over time significantly closer to what I have called the pre-COVID inflation path, while allowing us to monitor how some key developments unfold in the coming months that will indeed impact our policy. So we will understand a little better how the economy rebounds in the third quarter and then later on in the course of the coming months to have a bit more clarity, because of course we have better data, better number, and we can come up with some more reliable scenarios and even a projection. But it is still surrounded by a lot of uncertainty, and we believe that will bring us, as I said, significantly closer to that path of the pre-COVID inflation. Second, I just want to remind you that we have decided to use PEP, but it's not as if it was PEP and nothing else. We have a whole package of tools that we are using to great extent, addressing all all sectors of the economy, all axes of our action. And I'll just remind you that, for instance, we start with a very low interest rate, which is associated with forward guidance, which, as you will have noticed, has not changed as indicated in the introductory statement. We are also using, and we will be seeing very interesting developments in June, the TLTRO, targeted long-term refinancing operations, which are really offered to the banking sector at extremely attractive terms. Again, to remind you, if banks keep their exposure to the economy and keep lending, particularly to the corporates, but also to the SMEs and to, all the family of borrowers around, in that case, then they can obtain an interest rate which is minus 1%. So that's also a major tool to make sure that the economy really is flooded with the credit capacity that banks can intermediate. I also would like to remind you that we have a liquidity facility, which is the LTRO, which has operated as a bridge, which will now be supplemented by a PELTRO, which is pandemic-specific and which will also operate as a liquidity facility that is available for those of the banks that do not want to necessarily use the TLTRO. So we have plenty of tools, and of course we have the whole category of asset purchase programs, the PEP being one of them, and very specific to the pandemic circumstances, and as a result being temporary, being targeted, being proportionate in response to the pandemic crisis. Final point, because it's also an important one associated with TLTROs, is the enlargement of collaterals that we have decided, and which is certainly helping banks to come up with more papers in order to obtain refinancing. So, in terms of PEP as the best possible instrument at the moment, one item in the package of tools that we use, and the size of which we believe, as a Governing Council, in broad agreement, is perfectly appropriate and adequate in order to respond to the needs, I think has determined us to act in that direction. I think you had an additional question on DFR. And clearly we also, as a Governing Council, decided that under current circumstances, clearly the PEP was the best instrument to use, both in terms of monetary stance, but also in terms of monetary policy transmission.